The government just got handed $1 billion of taxpayer money over the next 4 years, and they're planning to use it to come after you. Well, not you specifically, but Australian businesses and individuals who they think might be underreporting their income or making errors on their tax returns. I'm Davie Mach, a chartered accountant, and I've looked into exactly where this money is going and what it means for business owners. What I found should make you take a very close look at your record keeping and compliance right now. So let me break down exactly how the government plans to spend this $1 billion, who they're targeting, and most importantly, what you need to do to protect yourself. Let's start with where this $1 billion is actually being allocated, because it's not just one big audit program. The largest chunk, just over $700 million, is going to something called the Tax Avoidance Task Force. Now, this sounds like it should be targeting the big end of town, and to some extent it is. This task force focuses on ensuring that multinational corporations and large entities are paying their fair share of taxes. But here's what's interesting. According to the ATO's own 2024 annual report, small business owners remain the largest group of taxpayers who don't comply with their tax obligations, with an estimated net shortfall of $17.65 billion. Compare that to large corporate groups at $3.65 billion. So, while $700 million sounds like it's going after the big guys, the truth is, small businesses represent a much bigger compliance problem from the ATO's perspective. And here's the thing, small business owners are also much easier targets. They don't have teams of expensive tax lawyers and advisors like the multinationals do. The ATO has actually been losing cases against big corporations left, right, and center. In 2024 alone, they lost 4 out of the 5 Part 4A cases. That's the anti-avoidance tax legislation. They've had to refund $600 million to taxpayers from litigation and objections over the last 2 years. So while they're talking about focusing on multinationals, I suspect a lot of this funding will still end up targeting small to medium business owners that don't have the resources to fight back effectively. The rest of the funding is being split between several programs. There's the Shadow Economy Compliance Program, which targets unreported and underreported income. This includes cash-in-hand jobs, illegal tobacco sales, and basically any income that's not being properly declared. Now, if you're running a legitimate business and declaring all your income, you might think this doesn't really apply to you. But here's the thing, the ATO's definition of underreported income can be pretty broad. They're looking at businesses that might be not declaring all their cash sales, incorrectly categorizing personal expenses and business expenses, underreporting income from side hustles or secondary income streams, and making errors in their BAS reporting. Another part of this funding package is going to the Tax Practitioner Board to regulate accountants and tax agents more strictly. They're specifically targeting dodgy tax agents and professional misconduct. This should be a warning to anyone who's working with an accountant or tax agent who's promising unrealistic tax savings or encouraging you to claim things that seem too good to be true. Because if your tax agent gets caught doing the wrong thing, guess who's still liable for the taxes? You are. The ATO's position is simple. You're responsible for what's on your tax return, regardless of who prepared it and who advised you. So if you're working with someone who's cutting corners and being overly aggressive with deductions, you could end up in serious trouble when the ATO comes knocking. Remember, if it sounds too good to be true, it probably is. Then there's the Personal Income Tax Compliance Program, which is aimed at addressing errors in individual tax returns. And this is where a lot of business owners could get caught up as well, especially if you're a sole trader or if you're claiming work-related deductions. They particularly focus on work from home expenses claims, car usage claims without proper logbooks, investment property deductions, and cryptocurrency transactions that haven't been properly reported. Finally, there's that Tax Integrity Program, which focuses on medium to large businesses paying their taxes and super liabilities correctly. This is probably the most relevant for most business owners watching this video. They're looking at businesses that might be late with super payments, companies that aren't paying the right amount of PAYG taxes, businesses that might be incorrectly structured to minimize taxes, and directors who might be personally liable for companies' debts. So, what does all this actually mean in practical terms? First, you can expect the ATO to initiate significantly more audits and reviews. They're not just randomly selecting people anymore, they're using data matching and analytics to identify businesses and individuals who look like they may be underreporting or doing it wrong. Second, they're ramping up debt recovery activities. If you owe the ATO money, they're going to be much more aggressive about collecting it. Third, they're going to be much less forgiving of honest mistakes. The days of getting slapped on the wrist for minor mistakes are probably over. And lastly, the ATO has significantly more powers to ensure they collect what's owed. They can use statutory garnishee powers, which means they can literally take money directly out of your bank account. They can also freeze your accounts and seize assets. For business owners, they're also issuing director penalty notices much more frequently. These make directors personally liable for unpaid company taxes, super, and PAYG withholding. So even if your company can't pay, they can come after you personally for debt. The ATO has also access to more data than ever before. They can match your bank account transactions, credit card statements, property transactions, insured assets, share trading activities, crypto exchanges, online marketplace sales, and even your social media activity. So if you're claiming you're making $50,000 a year, but your Instagram shows you're taking expensive holidays and driving a new BMW, they're going to notice. Okay, so here's what you need to do to protect yourself. First, lodge everything outstanding. If you have overdue BAS statements or tax returns, make it a priority to lodge them as soon as possible. It's always better to voluntarily come forward than wait for the ATO to come after you. The penalties for late lodgement are significant, but they're nothing compared to what happens if the ATO thinks you're deliberately avoiding your obligations. If your accountant has gone missing or has not lodged any of your taxes for years, it's not your accountant's fault. The ATO goes after the directors of the business, so if you're trying to blame your accountant as an excuse, trust me, it won't work. Second, don't ignore ATO correspondence. This is crucial. If you get a letter from the ATO about a debt, don't stick your head in the sand. I see this all the time and it never ends well. Contact the ATO immediately to arrange a payment plan or to provide the information they're asking for. They're often reasonable if you communicate with them proactively. There are always options, and if you need assistance, then speak to an accountant. Third, get your record keeping sorted. This is probably the most important thing you can do. Make sure you have proper records for everything you're claiming. If you claim work car usage, ensure your logbooks are up to date and accurate. If you claim home office expenses, keep receipts and maintain a record of your usage. If you run a business, reconcile your accounts regularly and keep all your invoices. The ATO's position is simple. If you can't prove it, you can't claim it. Fourth, review your structure. If your tax situation is complex, if you're using trusts, companies, or other structures to minimize tax, now is the time to get professional advice. The ATO is particularly focused on arrangements that they think they're designed to mainly avoid taxes, rather than for legitimate business purposes. Fifth, get professional help. If you receive an audit notice or if your tax situation is complex, get a good accountant or a tax advisor involved as soon as possible. Don't try to handle this yourself. Look, the bottom line is this. The ATO has more money, more resources, and more data than ever before. They're going to be much more aggressive about compliance and debt recovery. But if you're doing the right thing, keeping proper records, and staying on top of your obligations, you shouldn't have anything to worry about. If you're concerned about your compliance, or if you want to make sure your business is structured properly to handle increased ATO scrutiny, I've left a link in the description box below where you can book a strategy call with me or one of my team. We'll review your situation, identify any potential issues, and make sure you're prepared for whatever the ATO throws at you. Thanks for watching, and I'll see you in the next video.